My next guest has $900 billion in assets under management and a portfolio that spans real estate, insurance, infrastructure, private credit, with so much broad view of the economy. Where does he think we are in the economic cycle? Well, I welcome here from Milken, Brookfield Asset Management CEO Bruce Flatt. Nice to see you, Bruce.
How are you?
Good to have you. Let's just talk broad, because big picture, I think the question investors have is the inflation progress has stalled, and now the Fed is waiting to see what happens next. From your vantage point, what do you think it is?
I think inflation was last year's story. Like it's stalled, but it's going down. The trend is down. The markets are coming back. What indicates to us is liquidity is coming back into the markets. And every month for 12 months, liquidity has been coming back. That drives more transactions. It drives more activity. It drives buyers and sellers together. And so the world is opening back up after a tough 24 months, and it's getting better. So I just say, yes, we have inflation stalled, but we're on the right trend. We're on the trend, and that's what's really important.
Even if rates have to stay high for a little bit longer?
You know, high for a little longer.
Right.
And they're not that high, and they will come down, and that's what's driving people to do more. And you can we see it every day in the markets. We went out with a bond last week for our Intel fabrication plant, and I think we're 15 times oversubscribed. So there's just more money coming back into the system. Projecting rates are coming down, and that's just good for transaction activity.
So do you think that the Fed's going to be able to stick the landing and get away with this tightening cycle without causing any kind of bigger downturn?
They've done an excellent job so far, and the economy's strong. Markets around the world are pretty good, and we had a very unusual cycle this time, but they've done a really good job. So let's hope so.
There was no real default cycle or distress.
No, and
is that going to happen ever?
Not much. You know, we'll see some. There's always a tail. There's always a tail of some things, and some private equity businesses didn't make it through. Some real estate didn't make it through. There's a tail, but there's not. If the economic environment as we think of it today is what plays out, there's not going to be a lot of huge stress. But there's always opportunities for people with money, and there's a lot of companies that won't make it through. But that's just business.
What about commercial real estate? You are in this sector. There has been some distress, and people are worried that there's more coming. What do you see?
Yeah, again, that's last year's story. There's always a tail. So there's some real estate that isn't doing that well, but we're on the rebound. We're on the way.
We've seen the bottom.
We've seen the bottom. We're past the bottom. Rates are, remember, as rates were going up, people were freaking out they were going to go 500 basis points higher. They've gone here. Now we're on, with rates coming down, it means capitalization rates are going to turn the opposite direction. Values are going back up or going back to normal places. And so we're on the other side of it. That's not to say that there isn't an opportunity to invest, just like in private equity deals, to invest in some commercial real estate because people borrow too much money or the businesses or assets didn't perform to plan. And those always are the opportunities. So it's going to be an excellent environment over the next 18 months to put money to work in commercial real estate.
Where specifically? Geographically, category?
Look, I would say around the world, commercial real estate's really good. And there's a lot of sectors in commercial real estate where things are really good. Hotels are good, industrial's pretty good, multifamily's good.
Data centers.
Data centers are amazing. So there's a lot that's good, and internationally, things are good.
Just U.S. office space that's not prime.
Yes. U.S. in general, things that are over-financed or not financed for this environment in general, and bad office in general. Good office is amazing. And if you can find an opportunity to recap something that's in good office, that's a great opportunity. So I'd say U.S. this cycle, the most opportunities will be in the United States, which is not normal.
And do you see prices rising from here as well?
Look, it all depends on whether people mark their prices to where people thought they were, but not a lot of transactions occurred. So I would say the narrowing of bid and ask are coming in. We just sold a building in Dubai in the last month at the highest price ever traded in that market, just because it's an amazing building and it's super prime.
And it's in Dubai.
And it's a hot spot today.
What about credit? Because you actually had a deal announcement. You're doing a venture and a deal with a private credit firm.
Yeah, so...
Isn't this getting crowded, this space?
No, look, the banks will continue to lend in across the board around the world, and particularly in the United States. But institutional money is coming into the sector to fill the gaps that are out there. And we continue to build out our insurance business. And therefore, we need product to fill our insurance business. And as important, or maybe more important, all of our clients in insurance need broader types of credit. So we have our Oaktree business, we have our Brookfield credit businesses, and we just added Castle Lake into the franchise, which is specialty and aviation lending.
Yep.
So we'll just continue to build out the platform so we can serve our clients better, more broadly, and continue to deliver them credit.
On the insurance, my question was, is it better to own the insurance companies outright or to buy books of business, annuities?
So look, we decided we needed to control our destiny, and we have the luxury that we have $150 billion of our own capital. So we bought 3 insurance companies over the last 3 years, and we own the equity in the insurance companies. And what that's allowed us to do is to be a better manager for our clients. Because as we're designing the products for ourselves, we know exactly what our clients need. And so I think in the longer term, we're going to win because we have both. We can offer, we can manage capital for clients, but we're also doing it ourselves.
You also have been very big in the renewable space. I've heard you talk about the opportunities in this sector. The Microsoft deal that you just announced is pretty interesting. So they're going to invest $10 billion in renewables with you providing what?
So that specific deal is around the world. We have a global framework agreement to build them renewables, which they will use mostly in their cloud and data center businesses. But if you step back from that, there's an insatiable appetite for renewables globally just because of what's going on with the transition. And this is going to be something that's happening for the next 20 years. And that has been amplified by cloud and more recently by AI. And so what's happening in data centers and with renewables is it's started, but it isn't even in the first inning of what's going on with digitalization and with the transition of the economies around the world to less carbon. And that's really, really exciting.
We were just talking to Mike Wirth about it, and he was saying, sure, you can do part of it with renewables, but data centers have to operate when the sun goes down, and also it's not going to be enough. And so he's looking at natural gas opportunities.
Yeah,
as well.
so look, we're not a believer that oil and gas is going away. Remember, our pools of money we've created for our transition fund is we're transitioning the world to less carbon. You will still need oil, you will still need natural gas, but there will be less. And in electricity use, solar and wind are the lowest cost bulk electricity almost everywhere in the world today. So that's what's getting built, and that'll increasingly get built. The only thing, and he's right, Mike's right, you need storage. You need it because when the wind isn't blowing or the sun isn't shining, you need something. And batteries are getting better, but until then, natural gas is going to be a very important source, and that will be quite a long time.
So it sounds like you're very active on the M&A front. You've also been pretty active on the fundraising front in an environment that's been tough to fundraise. Yeah,
we have a very diversified and broad business. We are very international, and we're one of the larger managers. So people on a global basis come to us for many different things that we do with them. We have a long track record of delivering good returns, and therefore we've been fortunate that in this environment, that's what was getting money. and we continue to raise capital, and it's been a good period over the last 18 months.
And the biggest opportunity is in still?
You know, look, I would say all of the above. And every one of these businesses, they're just different. It's a big world, and there's so many things to do. But the infrastructure and renewables are going to be big for a long time and are very exciting, and we of course have a dominant position in them.
Well, it's fun to get an update from you, Bruce, on the various businesses and opportunities and what you're seeing in the markets. Thank you very much for taking the time. Bruce Flatt, CEO of Brookfield Asset Management.